right, and welcome to our recap here for January the 6th, 2020. So where we're at is we have, been taking really the better part of a month or so off, just kind of managing some positions that we had open in Volatility and a couple of major ETFs, but we weren't actively doing a lot of trading. Well, that changed today as we put on 10 different trades here in a variety of ETFs. So what we're doing is we went out to the furthest out weekly, which also happened to be a monthly, and we started for that particular weekly portfolio. Typically what we're doing, for those of you all that are new and kind of the direction that we're going to be going in, after really quite a lot of tinkering of the system over the last 6 months, is really reflective here in this first. So we were all in the February 21st, 2020 expiration, and here we are in EEM. So we did a 45 call and put with protection at 49 and 41, really wide break even. Now, one of the things that's a little frustrating to me about iron butterflies is that it's really difficult to have a really high level of profit, right, and kind of an even 50-50 profit versus risk split. And really here we're at 2.5 to 3, right? So not quite 50-50, more like 4 to 5 or so. But what's a little frustrating here about iron butterflies is you can't ever get beyond the expected market move, right? So even an at-the-money straddle isn't quite going to be at the expected move, and so if you want to get beyond the expected move, you have to do an iron condor, right? But the issue with an iron condor, of course, is that significant. You're looking at, to get beyond the expected move, you're looking at 2 to 8, right, or 1 to 4, $1 for every $4 of risk, and $1 of every potential profit for $4 of risk, and so you have to have significantly larger amounts of capital, right? So what we did today is we put on about $25,000 of max profit for this particular week, and we're looking at 10% of that, so about 2,500, as you can see here, 2,543 or so in this risk here, or max profit, right, with $3,000 worth of risk. So we're going to take this off at 10%, right? So we want to take it off at 10% across all of our ETFs, okay? So all of our ETFs to get 2,500 for this particular week. And so as you can see here in EEM, 49% probability of profit at expiration of 2/22. However, we're going to look for 10% profit, which is going to be a lot easier. So there's EEM. EFA looks the same, 47.05% of profit, really over the edge here at 69.5, still pretty much over the edge. EWZ, now EWZ, we have two different securities on. We have our expirations. We already have our March, but here, see, this is really nice because we were able to do 2,600 to 1,300 worth of risk, right? And decently wide break evens. We've got 44.37 and 49.64. FXC is going to look similar, 49%. FXC is not looking for nowhere near the same amount of movement, and so we're not necessarily seeing as large of a need for wider break evens. So then we move on to gold, and gold has been just taking a tear, 43.36%, right over 148. with a 143 and 152 break even. I anticipate that we're going to have to do some adjusting and laddering here. I just don't see us getting lucky enough to not have to adjust here in gold. So we go to IYR. IYR here, very tight iron condors, where we were right over the middle for the course of the day. So a little bit wider, 2,800, 3,200 in potential max risk. Our S&P, 55. Here's our standard deviation move. Again, nothing too out of the ordinary. 2,500, 1,900 in potential max risk. TLT. Again, same similar idea. We're going to skip volatility for now and go straight to XBI. Now, XBI is wide. XBI is very wide. Maybe could have done 4 contracts here and gotten close? I don't think so. So it's good we went ahead and did the 5 contracts and XLE wide there. And, we'll see what happens. Go ahead and create alerts, I would say, for the strike that is closest. So, we'll look to add a position here at 58. We'll look to add there. But then what we want to keep in mind is we have a specific dollar amount that we're trying to get here on each of these. And so as soon as we were to get to 250, we're essentially taking this off. That way, if we do 250 amongst all 10 of these leveraged ETFs, then we are right at 2,500 for the week. Okay, and if we do that 4 times, we're looking at 10K over the course of the week. Okay, and we're at about 10 to 15% total return on each of our positions, and max profit, which is really just solid. I really like that. We're not trying to get too much. We're not trying to get too little. In and out, 10%, and we're done. Okay, let's go into volatility. Volatility has been really a just kind of a stronghold here. We're up pretty nice in volatility. Still looking at all of these securities, so we're spread out over quite a long period of time here in volatility, here in VXX, UVXY, only 5 series. We'll look to add here, but we're up really nice here, 14, 17. I think that's where VIX closed today. So we're up really nice here in volatility and got a long way to go up here before we would start to lose money on some of these trades here, all the way out here at 24.64. It's that laddering process we talked about in early December. Okay, so here's where we're at in a lot of these. We'll look to continue to add some additional volatility trades over the next week or so in order to just continue to build out a little bit of this portfolio. Okay, so this is where we're at. A lot of good stuff happening. Really excited about 2020. If you have any questions at all, please feel free to reach out to me at Ryan, RYAN, at Sell That Option. Otherwise, we're just going to continue to rock it. Looking for 7,500, 10,000 a month. And we will look at every day how it's happening. All right, here we go. Let's do it. 2020, here we come. Awesome. So what you just saw was an example of a video that I send every single evening that I make an opening trade, a closing trade, or an adjusting trade to the members here at sellthatoption.com. I sincerely believe that when it comes to the stock market, right, there's so much misinformation out there that you have to have somebody, at least at the start, teaching you and guiding you and really getting you the behind the scenes information and really into the mindset of somebody that's figured it out and is successful. And so not only do I send a ton of educational content, I have these courses right here. I send the daily recap videos. I send the weekly strategy videos. I've got general knowledge base. I've got Udemy courses, right? But I want you to, when I'm able to talk about, right, the trades that I make and why I was making the trades that I was making, that is true education, right? That is education. That it's not just me sending out what I'm doing and expecting you all to blindly follow that, right? That's literally the opposite of what I want to do, right? That's not what this is about. This is about true education. It's about truly teaching and saying, hey, this is what I was thinking. This is what I was seeing. And I sincerely believe that that's one of the most effective ways to really learn how to do this. Now, what I'd like for you to know is that first, visit my site. Go here to Stock Trading Services. If you'd like to join, right, use discount code YouTube, all lowercase, YouTube, and that's going to get you 50% off all of my services, okay? So, again, discount code YouTube for any of these potential stock trading services. So you're going to get my lifetime membership, 50% off, right? Yearly, quarterly, monthly, 50% off with the code YouTube. Follow me on social media via either on YouTube or in Twitter or on my Facebook or on my Instagram. Follow me on my social media platforms that you can see right up here in the corners. Okay, YouTube, Twitter, Facebook. I'll add Instagram on there. But again, discount code 50% off YouTube. All right. If y'all have any questions, please feel free to reach out to me at Ryan, RYAN, at sellthatoption.com. Again, 50% off code is YouTube, all lowercase. And if you have any questions at all, reach out to me. Otherwise, stay humble, stay hungry, and here's to our success.